Thanks for checking out this week's FinPrep Trading and Investment Video Newsletter. So SPY previously unable to close above that 50-day moving average. We now can't even on an intraday basis, haven't been able to get above that 20-day moving average. So in effect then SPY carving out this downward price channel with a series of declining tops. Not kind of the end of the world action, could be bullish consolidation prior to a move. So coming off Brexit referendum, nice shot up and kind of drifting down sideways potentially, particularly if we can get towards the lower end of the trend line, could produce the conditions for a considerable move outside of the trend line, similar to the time period that we had here, perhaps right in mid-April and through mid-May, with the final touch coming in on the lower trend line, and then a nice breakout. So with the fast stochastics also coiling up, particularly if it can coil up in that oversold territory, that could be interesting. But on the immediate term, we do have a little bit of a overbought condition on the ultra fast time frame. So further downside potentially ahead for SPY this week. We'll see what happens. But if anything, at least for us, it does interest us again. 210, 207, 204. But for the immediate target, 210 for a potential swing long, depending on how price behaves once it gets there. Bonds did get the bounce referred to in last week's video. However, so up each day this week. However, with having said that, only about 1.3% for the week. So not a terribly great showing, and in the process, nearly becoming overbought on the ultra fast stochastics. Kind of mixed messages on the MACD, where it looks like you could have a bullish crossover on the daily MACD. However, the weekly MACD flattening out a little, but still kind of a bit close to that zero line. So watching for any potential crossover would be negative. So kind of a mixed picture on the bonds. The picture, it just isn't as quite clean as what we may end up getting out of SPY in terms of a setup. Dollar index, again, that breakout from that pennant formation, pretty clear. We'll look at the Euro chart as well, but we did consolidate sideways here right into that rising 9 exponential moving average in bright green there, and then a nice 2-day blast off. So if Friday's move wasn't kind of the end of that, we would look for potential resistance around this 25, 70, 75-ish area. So any further upside or relief from the upside, so dollar taking a bit of a breather, would then help, presumably with gold. Gold kind of chopping around this 200-day moving average, trying to find its footing, but still with the 20-day declining moving average, we could still see some of that selling in terms of getting down to this 115, 114 zone for a potential swing long. Remains to be seen. In terms of the yen is similarly chopping sideways, kind of popping up above and below, at least on one occasion here, that 9 EMA. So a little bit indecisive, something of a pennant formation, could end up being a bit of a bottom, but I think it's at least, it seems a bit early to jump to that conclusion. And in terms of the euro, again, it's going to have its analog to the dollar chart given its extreme weighting in the UUP there. But basically, you can see the pennant formation, essentially a triangle with the base here at the 108.30. So you apply the height to the breakout point of 108, and basically you hit the target of 106. So and also pretty far removed from its even fast, exponential moving averages. So if any buying relief should come into the euro, that should take pressure off the dollar's upward ascent, and then presumably feeding back in through the commodities, gold and oil. So we'll see how that plays out this week. But of particular interest for at least a medium-term swing would be any setup on SPY getting us back down to that 210 into oversold, particularly on a coiled fast stochastic would be pretty darn interesting. So we'll see what happens. But pretty interesting stuff this week. So looking forward to next week. All right, take care.